And we are live. You're listening to Interchain FM, a weekly technical podcast about all things blockchain interoperability. I'm your host, Chango Unchain. I'm here with Eric Chen. He's the founder of Injective Labs. It's the project behind Injective Protocol, which is an on-chain derivatives platform. We're going to talk all about perpetuals and futures and other products that they have coming down the pipeline. And they're the first mover for this particular product in the Cosmos ecosystem, whereas DYDX was the first in the Ethereum ecosystem. What does that mean? You'll learn all about it in the next hour. Eric, why don't you give us an intro about yourself and how you got into blockchain and what got you interested in Cosmos to bring about Injective?
Yeah, sure. Happy to be on this podcast. So I first got into blockchain back in, I think, around 2017 or 2018. Just basically found it very fascinating. And kind of just so happened that the university back then I was in was basically very active within the research, especially on the cryptography area. So just been, helping out from just academic curiosity perspective, and slowly, got more involved in terms of the trading aspect of it. Because I was studying finance and CS, so kind of really touched both sides of it, and joined a kind of an early stage fund deploying a lot of trading strategies. And that was basically when I decided to go into crypto full time. And yeah, pretty much started Injective in 2018 quickly thereafter, and been working on it ever since.
And you guys had caught the attention of Binance at that time, right? Was it 2020 when you guys did Binance Launchpad?
Yeah, so we got it incubated by Binance Labs back in 2018, and did Binance Launchpad in 2020.
Very cool. Can you tell us more about that? Why did you go through Binance Launchpad to launch this protocol, and why did you build it on Cosmos?
Yeah, so basically back then there were a few criteria that we were looking for in terms of, kind of like a scaling candidate, because we know that it's pretty impractical for any type of kind of order book-based exchange or any type of derivative product to be built efficiently, even with kind of like an AMM model on top of Ethereum. So back then when we were kind of scouring through all the candidates, I think the Tendermint consensus makes the most sense, because number one, there was a fast finality, well, instant finality actually, and then basically the block time is pretty malleable. There's a lot of parameters that we can adjust, and it basically creates a lot of flexibility that we can leverage for building a much more optimized order book infrastructure. And on the other hand, it has pretty standard proof of stake mechanism that's pretty decentralized and basically promotes for a lot more security than some of the other counterparts we look at. So that was the main reason why we picked Tendermint. And then later on, we kind of see how Cosmos really started growing, and we decided to move over to Cosmos SDK. And definitely, the keeper query model makes a lot more sense for what we were doing back then. And ever since then, basically, we just been following everything going on with Cosmos, and decided to upgrade to the latest Stargate version for IBC.
Very cool. So what was it about your work in funds that led you to build a DeFi product?
Yeah, I mean, back then, the crypto trading avenues are extremely inefficient, and especially back then, there were not a lot of regulatory oversight or even self-regulation. So it creates a lot of, I would say, unfairness and intricacies that really makes you want to punch the keyboard a lot. So that kind of motivated me to build a decentralized infrastructure that's, first of all, trustless and decentralized, because there were two things that I kind of anticipated, right? Number one is that people are going to have more and more untrust towards these centralized avenue, whether it's at the fault of the exchange or at the fault of the user. Simply because a centralized avenue just wields so much power over the individual user, and within a traditional finance space, there's just so much regulation placed on top of these avenues that makes it almost impossible for them to quote unquote screw over users. But whereas for crypto, you don't really see that, just because it's such a new and rising space. This second part is that just in general, I think that, like a lot of these crypto exchange avenues are going to go through like an overhaul, either due to, security issues or due to regulatory issues. And I think, the ultimate truth, whether the community or the overall market realize it or not, decentralized avenue is pretty much the ultimate solution for anything, that has to do with crypto, because time and time again, these avenues are going to face a lot of pressure from governments, who want to have, currency supremacy, or who wants to have, tighter control over, their own subjects, I guess. So basically, crypto, or the overall blockchain space is kind of disrupting, or taking back this control. So I feel like, in the long run, if the crypto space grows exponentially, continuously, then it makes sense that making sure that everything is censorship resistant and decentralized is kind of the ultimate solution.
You kind of alluded to the fact that there's going to be crypto regulation coming down, and you want to make sure that this protocol and these DeFi products are as censorship resistant as possible. But what do you anticipate coming down the pipeline for you with the infrastructure bill looming over us?
Well, I mean, like the most important aspect of this is to make sure that, basically in the event of anything that happens within, like a central subset of actors within a decentralized protocol, it doesn't compromise, the integrity of the overall network. So again, like this is why decentralization is important, because let's say for Ethereum's case, like Vitalik dies tomorrow, I sincerely doubt that Ethereum is just going to stop working, or people are just going to stop using Ethereum. So I think the same set of kind of ethos should place within every single protocol that has to do with like a community, or has to do with kind of like a timelessness to it. So that's why basically for our case, we want to make sure that Injective, even though it's not the place I want it to be right now in terms of decentralization, will definitely progressively become more and more decentralized and leaderless over time. And in terms of the infrastructure bill, I mean, like that's very concerning. But I think just in general, basically, I hope that they reach the right conclusion in terms of how to properly regulate this industry. And given how scrappy the crypto space is, there's always going to be challenges, either from the judicial branch, or there's going to be basically workarounds, or like a very possible fact is just that U.S. might be denied from accessing any type of proof of stake blockchain. I think that has been kind of a trend that we've been seeing. Like U.S. slowly losing access to a lot of products that are available to the greater crypto community. And it would be unfortunate if that was the case, but I wouldn't say that it's something that like that's going to fundamentally change how the entire industry will work.
How would that be done if an American citizen were to try to access a staking protocol? How would they be prevented from accessing it?
I would say that it's almost impossible if they actually do try. Again, like people can try to shut down Bitcoin, or be denied from the P2P networking within the Bitcoin network, but you just can't, right? So theoretically you can't, but like I would say that like a lot of companies would basically just try to block US IPs. Basically for any type of user or GUI interfaces, KYC users, making sure that they're not US persons and stuff like that. But I think, fundamentally, these are just regulatory theaters in a sense. For basically, it's like the government saying, hey, you should do this and you should do that. And, they'll try their best to comply. But the nature of decentralization is that, like this is a community driven effort. There's no way a central team can possibly censor, like people from accessing a decentralized network, because they don't even have control over the network. Sure.
Spoken like a true cypherpunk. Let's talk about the core product in Injective. So you guys you're an order-based, you're an order book-based DEX, and two of your primary products are perpetual swaps and expiry futures. Is that right? Can you talk more about that?
Yep. So we kind of built out this entire order book infrastructure in a very much like a blockchain advocate nature. So that means that, in a traditional order book based exchange and how people would kind of naively implement it, it will always be a continuous double auction. So basically, there's a tick rate, and every time there's an order coming in within that tick rate, they try to match it. Usually these tick rates for centralized exchanges are, within microseconds. But we realize that this is basically not impossible for any type of stateful exchange. And that's why we see, in the past, there are attempts around it, and there are, very brilliant workaround for it. But it's just simply, not that friendly, and didn't really, bode well or reach the mainstream adoption that we would usually expect. And that's mainly because, first of all, there's a lot of front running issue, and there's a probabilistic execution issue. For 0x had that really smart idea of doing off-chain matching and on-chain settlement, and back then it seemed very innovative. And one surprising thing is just that it didn't become the next Binance or next FTX. And I think the main reason behind that is just that basically, first of all, when you're matched off-chain, the settlement of it is probabilistic, and second of all, basically it still doesn't resolve for a settlement process, still doesn't resolve the front running and collision issue. And also, basically, it kind of throttles the turnaround for any type of trade, especially for market makers' case, where they always want to make sure that they can turn around within the next block to be able to rebalance their position. So again, it goes back to constraints of Ethereum. So the way we went about it is basically utilizing frequent batch auction. And it's frequent to the case that basically there's a batch auction happening every single second or every single block. So basically at the end of a process, any type of order aggregation within that, block time is irrelevant. Basically the ordering of all those income transactions is irrelevant because they're batched together and set a uniform clearing price. So first of all, this is very friendly for market makers. And second of all, it removes the collision for running issue. And on another hand, just in general, it's a fairly friendly mechanism that was being consistently explored by these centralized avenues, especially within the traditional equity market. It's just not as widely adopted, just because a CDA is just so much more friendlier for quant traders and just to promote volume on the exchange. So from the exchange perspective, it might not necessarily make sense, but for like a decentralized order book, it definitely makes a lot of sense. And yeah, so with this kind of like base layer infrastructure in mind, we decided to kind of build like a spot market on top of it, which is obviously a first use case, and a derivative, and basically focusing around perps and also expiry futures. And specifically because spot market, we see definitely if we were to just support spot market, that means we would be in the middle of like a giant market around automated AMMs, and also like the centralized avenues. And generally when you see traders interact within this ecosystem is that they are between these centralized avenues with the AMM, and that's what promotes a lot of volume. So I think this kind of creates a very, very, very awkward position where you're kind of trying to clap with one hand. But I think around 2020 or 2021, and that's when we realized that basically derivatives is slowly going to be more and more curtailed by region restrictions, and basically a lot of people are going to be denied access by it. And that's when we realized that there's a chance for these decentralized derivatives to really take off. And that's around the time, I would say like early 2020 or like late 2019, for us to really start exploring adding derivatives, and also, well, just in general derivatives, well, that includes perps and also expiry futures onto the protocol. And because we kind of saw that, first of all, BitMEX is always like a problem child within the crypto space, and yet like they used to be the leader, and the always had the volume domination. But we had a kind of like anticipation back then that it won't necessarily be like the top dog in space per se. So that kind of gives kind of like a power vacuum, or like a like a user vacuum distributed throughout new incomers like back in Binance futures, and then later on FTX, and more importantly to like decentralized avenues. So that's kind of what made us realize that like this could be like a very, very significant product driver, like like a protocol growth driver for everyone trying to access decentralized derivatives avenue. And yeah, I guess like right now kind of like panned out pretty correctly, I guess.
Totally, you made the right bet in the trajectory of the entire market, and so I mean, I at least I would say so. If you're an order book based DEX, does that mean that you use a decentralized oracle, or how else do you access spot price?
Yeah, so for Oracle, there's like mainly three avenues. Right now, we're trying to do basically, I think Chainlink has pushed out their OCR, so we're working on an integration on that, and that should be pretty much that should be within the last phase, and should be pushed out before canonical release. And Band is obviously a very, very exciting one, and we basically really went down a rabbit hole around IBC for that, because we basically utilize IBC kind of for the first time, honestly, to not just be doing asset transfer and stuff like that, and instead to push price feed through IBC. And back then, I remember there were a lot of discussion in terms of the travel time and how do we reconcile for a price feed. So there were a lot of consideration being done around that. So I think that was pretty exciting. And another one is basically a more customizable, like a centralized Oracle outlet. And a good example of that would be like Coinbase Oracle. Basically, the reporting of which is decentralized, but the source of which is centralized. As in like everyone can actually support or like report a Coinbase Oracle price feed, because the signature has to be verified on chain, and it's going to stay consistent. So it just becomes like a decent Oracle outlet. But that being said, like people don't really like a single exchange Oracle source, so I wouldn't expect that to get too much adoption.
Got it. And so I want to go back to the batch auction feature and talk about MEV. So I want to know why batch auction could potentially mitigate a lot of the risks that is presented in minor extractable value, and how you do that, because Tendermint consensus because in Tendermint consensus, the validator still orders transactions. And so if the Injective protocol batches transactions, how does it force validators to kind of batch them arbitrarily and not necessarily order them in some deliberate way?
Yeah, so basically within a batch auction, you could the validators could be selectively censoring different incoming transactions, and basically hey, like I'm not going to let this huge out of money limit order to come in and skew the clearing price. Instead, I'm going to let in the next round after I come in, and that's certainly a possibility. And basically, this is why governance is a thing. Like if basically people start realizing that some validators doing that more than once or like more than twice, where it's like to the point where it's intentional, then it could be like a governance-based slashing, where obviously the validators have to keep each other in check. And we tried a lot of different ways to try to mitigate this or like regulate this, but basically the best way to do this is still via governance, because it's very well possible that sometimes orders do get missed through a crack. But that is pretty much like the only attack vector that could possibly happen, in the sense that basically you're denying this transaction from coming in this block and letting it come in the next block. And obviously the trader can obviously enforce like, hey, I only want this transaction to be included in this block, or else it's going to fail. But basically it's kind of like a type of order that's like very, very big and have all the safety features removed. And but in terms of intra-block collision, or like any type of reordering within that block, that pretty much doesn't make sense for them to do it, because again, like, it's not a sequential execution. It's more like, all the orders coming in, and all the new placements of limit orders, and also like sometimes market orders. It goes through a very sequential batching process. So first of all the market orders are being executed. So that means that like, they're executed on a pro rata basis. So it doesn't matter whether you're the first one on the queue or the last one on the queue as a market order. You're always going to be executed. And this is all before all the limit orders come in. So there's no way for you to farm run against these market orders. And on another hand, for all the limit orders, again, the ordering doesn't matter, because they're going to look at all the new order additions and batch them together and kind of look at all the cross orders and just come up with a uniform clearing price. So that means that basically, it doesn't matter which limit order came first, which limit order came second. Everyone has pro rata fill priority, and everyone is just going to get fill the same amount. So let's say someone has like a gazillion in like a bid, and like only someone is only getting one sell. So like basically that one sell is going to be distributed evenly throughout those gazillion bits, right? So it's generally like kind of like if someone were to design a matching process where time is completely taken out from the process, this would kind of be the result. So that's why it's important. And that's why we kind of adopted frequent batch auctions, that we want to make sure that ordering is completely irrelevant for this entire process.
So unlike bidding up priority gas auctions on Ethereum, that's mostly not a concern on Injective with Tendermint?
Yeah, that's not a concern. Yeah, because there's no point in basically trying to be first within the execution. There might be a point for like being included, but that's just natural supply and demand. Yeah.
Okay. So what's the idea behind creating an order book based DEX rather than an AMM for a derivatives market? And how does it compare with the design of DYDX and comparable protocols on Ethereum?
Yeah, I think like the main reason why we wanted to do that is that we don't really see like a fully decentralized order book around much within the ecosystem. We might see Serum sitting on top of Solana, but it's pretty siloed off, and it's kind of like exclusive to the Solana ecosystem. So we really want to create this order book infrastructure that kind of serves the greater crypto ecosystem, for the entire Cosmos ecosystem, for Ethereum, and in the future for a lot more protocols as well. And this and basically we kind of want to be like, hey, like, we've built this custom chain, making sure that every element of this is optimized, and obviously order book is very, very expensive in general from an execution perspective. So we've optimized everything. We design a consensus around this, and this is kind of like a base layer infrastructure for you guys to use in the long run. And why, in terms of why order book, is that basically I would say that like we were kind of back then we were thinking like, hey, like order book is kind of harder to build, relatively speaking, than like well, actually order book exchange was not built back then sitting fully on chain, or that has a custom consensus that kind of mimics the user experience and speed of a centralized exchange. That definitely was not built back then. So back then we wanted to take a crack at it and just build something new out of it. And another reason is that like obviously Cosmos is working something very exciting around Ethermint. So basically, like, even if like order book doesn't make sense, it's pretty trivial for us to basically work on a few contracts and just deploy like an AMM version.
Why didn't you start off with trying with using the AMM model? So from the 0x perspective, there was a reason why order books didn't really take off. Why did that fail, and why do you think Injective might be successful?
Yeah, so I think like basically back then we had a lot of discussion with the 0x team because Injective back in 2018 was presented as kind of like a solution to resolve collision and front running. So initially we thought that hey, like maybe it makes sense for us to be a relayer and implement all the matching safety and remove that probabilistic element in terms of like order matching and just become like a 0x relayer. And I think for 0x's case, it's more like like they want to sit 100% on Ethereum and basically be based around Ethereum. And obviously now, like if you look at how 0x ecosystem grew now, a lot of their solutions are slowly come back together, especially because of the advent of like layer 2 solutions and stuff like that. But I think like back then 0x was definitely more like ahead of its time because they're basically trying to come up with a L2 solution when like fraud proofs and stuff like that does not exist. And I think like if 0x were to launch today, it might have like a very very successful launch. It pretty much would have been what DEX is, and so so I would anticipate definitely like there would be a revival at some point for 0x to really gain traction as well. And the reason why we're confident is it's mainly because first of all like you see a lot of kind of like the DeFi traction going around, and you see a lot of like AMMs becoming more and more impressive over time. Then you're slowly going to realize that like if there's a order book based avenue that's just as liquid or comparable in liquidity as a centralized exchange, then these AMMs, our volume would mainly directed towards the decentralized avenue because it creates a much more capital efficient and instant swap. So you don't really have any type of inventory risk in terms of rebalancing. So that was kind of like why we're like pretty confident in terms of basically having kind of like a day one volume. It's just because first of all, AMM really helped the cause for order book model, ironically not the other way around. So it's going to help with the bootstrapping of initial liquidity as well. And just in general, we realize that liquidity on an order book exchange is obviously very, very important. And so we actually had quite a few initiatives to make sure liquidity on Injective is on day one is basically supreme. And number one is that we really try to grow the market making team as kind of like a part of Injective Labs to becoming like the day one market maker for the platform. And we can do that actually because Injective is decentralized, so we don't really access any type of like privileged data that no one else has. So it becomes a level playing field. And just in general, we also engage with quite a few market makers to make sure that the day one liquidity and there's always like a two-sided market. And yeah, like there's also a few yet to be announced like liquidity proposals that we're trying to implement that's going to incentivize people to market make in a much more natural way on top of the platform.
So yeah, my outlook on the market of market makers is that a lot of them have been some of the smaller ones have been regulated out of existence, and so only the bigger players are able to stick around now and compete. And so does Injective somehow even the playing field for that market and allow some of those smaller players to enter back into the market making process? How does that change the game for market makers?
Yeah, I think just in general, like DeFi has already been, bringing the market makers back in the game, because it is fair to say that basically a lot of the small market makers back in the day, I would say a year or two ago, was definitely being crowded out of the game, especially with Jump, Cumberland, and a few others really coming in and drawing most of the alpha from like decentralized avenues. Especially for when Jump started trading on BitMEX, a lot of the kind of like easy ARBs and easy opportunities are gone. And so you really, it's kind of like a weeder process for, like a lot of the prop shops back in the day. We saw, a couple of them spin up, a couple of them went down. I think Alameda is the best example of it. Like they spun up and, kind of maintained the edge even when the bigger guys come in. So it slowly becomes a winner take all. But I would have assumed that this would have been the case if it wasn't for DeFi, because basically a lot of these bigger guys, they're always constrained by compliance. They're always under the regulatory pressure, or they're all based in the US, so they can't really trade within DeFi, or they would have to do it in such a they would have to take a lot of time to even be able to deploy within DeFi. So basically, this allows for so many small players to spin up and really create that edge, and or to build that incumbency in capital to be able to compete against the bigger guys. So I think DeFi is definitely a very strong level playing field, and a good example would be kind of like myself, because back in 2018 we were kind of toying around the idea of building some strategies around arbing, and also doing some kind of I guess back then earlier iterations of Flashbot to fight for liquidations and stuff like that. And basically that was actually one of the potential ways to bootstrap the company for Injective Labs.
Oh, wow. That's excellent. Okay, yeah, just to give the audience a little background about Flashbots. It's so so Flashbots, you're not talking about the organization as in Phil Diane, that project that's been funded by Paradigm, right? You're talking about seeing ARB opportunities in the mempool in something like like an AMM on Ethereum, or some smart contracts where you could front run in a decentralized exchange, and then you would basically take the spread and take a profit and do this at a automated fashion. And so so Flashbots would be kind of formalizing that process and kind of democratizing it to lesser sophisticated players who also want to access the expected value that is to be gained from this MEV excess.
Yeah, so back then the EV was definitely not that high, but it was it was very interesting for us to look at, because it's just from an intellectual curiosity perspective. I think that was kind of the start of things. And then I think a couple months later, and I think a couple of weeks later actually, and then that's when Phil Diane did that talk for Flash Boys, because front running was definitely a continuous discussion. It's just the opportunity back then was nowhere close to be as big as what it is now.
And so that came with greater volume as these exchanges grew, right? So
yeah.
Do you anticipate the expected value to be gained from exploiting MEV in the Cosmos ecosystem to also grow as more of these DeFi protocols get launched, as volume grows on Injective, for example? Do you see that also happening for Cosmos?
Yeah, I think that's a possibility if different mechanisms are not being designed in a perfect way, or maybe they do have to take some drawbacks due to basically they weigh the pros and cons, and but I'm pretty sure in terms of ordering, because for Cosmos transaction ordering is not practically gas based. It's more the validator has kind of a say. So I think there's going to be a little bit more, I guess, bribery action happening that I would be worried about. So yeah, that is a possibility, but I think that generally a lot of times what would happen is that validators would value their reputation or their legitimacy over commercializing basically an exploit.
But aside from validators, wouldn't there still be mempool seekers, right? The ARB bots that are stalking the mempools of each of these DEXs, so to speak.
Yeah, that's certainly possible. But there's a few caveats here. First of all, back then, the only reason, obviously now it's a lot more different, but back then the only reason why we could do what we were trying to do was because we can pull the entire mempool, I guess, back then it was capped at like 2 megabytes, basically like the highest few like gas prices and stuff like that. Like basically we can query that and just like look at all the profitable transaction and just like run them. But you can't do that when the block time is 1 or 2 seconds, because it basically requires you to go through every single transaction. And since the size is so much bigger for Cosmos's case, then you have to like spend time really optimizing it, go through every single transaction, look for opportunities, check against centralized avenues, or like check whether this is an arb opportunity, and then make an execution against it, and pray to God that it gets included within this block and the validator just doesn't shut off for this round. So it gets a lot more difficult. I would say it doesn't create like an open playing field per se, but it is certainly a possibility that I would anticipate in the future.
Interesting. So the fast finality speed of block finalization actually mitigates MEV in some sense, or it mitigates seekers.
Yeah, of course. Basically, like back then, like BSC was had some like promotional material, and basically they're like, oh, like what if the users are worried about like oh, actually no, I don't think that was BSC. I think that was actually Binance Chain. That was like the users were worried about like, hey, like what if there's front running, or like what if there's like, I guess back then it wasn't called MEV, it was more like collision and whatever. And they're like, yeah, like the fast block time basically makes it impractical for people to do it. It is kind of like a fair point. Obviously later on, like this is kind of like buying time. Like what if there's like way faster machines that could do it? But like for now, like this is not like a significant problem. Like this is certainly like a mitigation strategy.
Sure. So for your product suite, let's talk about perpetual swaps. Can you give us a high-level overview of that, and what sort of assets are going to be initially supported when you launch?
Yeah. So basically, perpetual swap is basically our entire derivative protocol is very, very flexible. So for perpetual swap, for like expiry futures, we did a lot to make sure that the funding rate calculation is malleable. Like the way expiry futures liquidation is also extremely malleable. And also, how margining works is also malleable. So, like there are some
before you go on, can you define expiring futures?
Oh, expired futures. Yeah. So basically, an expired future is kind of like an agreement to buy or sell like a certain asset or like commodity at like a future point in time, right? So like you could be buying like a futures contract for like grain like a year from now, because the farmer will have to actually make the grain or like harvest them and then like prepare them and then like delivering it to you. And like back in the day, like these expiry future contracts are primarily used as a more liquid way, or like a more liquid tender to like transfer these values, because it's kind of like how like the paper notes came to be, right? It's basically a debt note that basically said, hey, like I put these money into the bank, and then like or these gold into the bank, and then these bank give me like a debt note. And futures contract is kind of like a similar case for commodities, where it's like like it takes such a long time for me to like ship these commodities to you. So hey, like here's the agreement in the future, like for purchasing. So
how is that different from an option?
Well, if you buy the contract, you get it. Like if you
whereas the option is the option to buy the contract.
Yep. So the option has a strike price, whereas for futures it's like, hey, I'm buying this to claim like 100 of whatever in the future, right? A perpetual swap is kind of like more like intricate version of futures contracts, because there's no expiration, and it's mainly maintained. It's to make sure that it trades within the value. It utilizes funding rate, and that funding rate can be like determined in like many different ways, and there's so many school of thoughts around it. And so, for example, Binance's case, they go through like a similar fashion as like BitMEX. FTX got a little bit creative with it and did like hourly funding rate that's very actually straight and simple, which is like, hey, like this perp swap is trading at 10% premium or like 5% premium, then every hour we're going to apply like a discount or whatever to it, and basically charge the the longs a little bit of funding fee, and basically make sure that they sell to make sure they keep it under or around the mark price. So funding rate is very, very key for perpetual swap to maintain its value, because there's obviously there's not like a settlement process. And in order for you to secure against, what if it just goes completely out of whack, or what if there's no liquidity, or people lose faith in it? There's always an insurance fund for a perpetual swap to basically make sure that hey, in the case that perpetual swap becomes way too volatile and there's no there's an entire clawback event, insurance funds will be tapped to to be kind of like the buyer or seller last resort, and to secure the users for any potential loss. So this is kind of what gives people confidence about perpetual swap, and why they think that this is good for money, is because there's that insurance fund that's kind of like almost like underwriting it, right? It's actually, yeah, again, going back to that bank idea, it's almost like, hey, like this bank note is secure because there's a bunch of gold within the bank, right? Yeah, and the way like Injective design everything, it's like it's highly parameterizable. So like there's always that flexibility in terms of like you can tune every single parameter and really come up with like extremely creative ideas. Because first of all, like we try our best to integrate with as many Oracle solutions as possible. So that means that beyond exchange price fees, beyond just DeFi price fees, there's also traditional prices like equity. There's also basically forex prices and stuff like that. So basically, we want to make sure that our mid to long term goal is that we want to make sure that the user has access to every single secure price fee out there in the world. And so this way, like there's no restriction in terms of what you think is possible on top of Injective in terms of like instruments. Yeah, and right now, like we've been trying to bring those customizations to the users or to the community members by kind of like exposing those parameters to them. It's like, hey, like here are some of the Oracle solution, or here are some of the price feeds and stuff like that, and they can say, hey, what's the max leverage, how long it should settle, like when it should settle and stuff like that. So basically, sky's the limit for the user in the when we expose everything.
Yeah, just to summarize all of that in a dumbed down version, funding rate is basically a counterbalancing mechanism that ensures the delta between the futures price, the futures contracts, and the spot market ultimately converge to zero, right? And on FTX, this means rebalancing every 10 minutes, and or sorry, 10 hours.
1 hour.
Every 1 hour. And on Injective, what is that in the protocol? Is that every block?
Right now, we're just so first of all, that's customizable. But like for the first market, for the BTC one, is just a standard 8 hour. Just because for an hourly settlement, basically there would be a problem like in the event of a low liquidity that it would entrap a lot of positions into liquidation, which is not something we want per se. So basically for now, like for the ones that we proposed, it was 8 hours, but like 1 hour is completely possible as well.
All right, I understand the difference. So what are you alluded to Bitcoin being one of those assets that you are going to be supporting in your derivatives market. Are there any other assets? And since these are futures, you don't actually have to custody any of the underlying assets, right? And so the sky's basically the limit.
Exactly.
What are you going to be supporting besides Bitcoin futures?
Yeah. So I mean, like, in terms of like what markets can be supported is really like limited to like what Oracle, like what are the available Oracle solutions to the users and the security of it, right? So if there's a secure Oracle solution, let's say for example like Chainlink, that can support a very robust, let's say Uni or like Atom or like basically very diversified, very strong, like represents a lot of liquidity and always available, then like a purposeful market for Atom can be created, and or like even an expiry futures contract for Atom can be created as well. And actually for Adam's case, it's actually pretty interesting because like you can actually hedge against the unbonding period by utilizing expiry futures contract, which is something that we kind of like played around with as well. I mean, this is the same for like all Cosmos zones. Like if you have a long unbonding period, like you can actually utilize like perp or like an expiry contract to like hedge against it.
And what do you mean by hedge against it?
So basically, let's say there's that. So people stake into these protocols, like to earn a staking reward, and during that unbonding period, basically that asset cannot be moved around. Because at least when it is a staking derivative, well, it depends, but like when it is a staking derivative, at least there's some liquidity around it. But when it is undergoing like unbonding period, it is practically unusable or unutilizable. And for some people who want to be like, let's say, delta neutral or like like low risk, like if they're worried about the atom price going down, or like if they're worried about like atom price going up or something like that, they can basically take on like a opposite side bet in like a leverage sense. So this way they have a small amount of capital to hedge against the bigger exposure, basically to atoms that are undergoing unbonding period.
Okay, so how do you decide on the collateralization ratio if the underlying asset is being staked? How does somebody take leverage out in order to bet on the spot price changes in Atom?
So that's definitely for most of the futures and perpetual swap markets. Obviously, our goal within the second version is to support all collateral types, but for now it's definitely just stable coins. Just because generally for a price feed you see as well, it's all denominated in dollar, or like USDT or like USDC. So basically, we want to keep that same convention and not create like a collateral crisis, basically for now. And basically for a second version, we are working on kind of like a more globally marketing system where basically people can collateralize with a lot of things. And the way it works is just that, if your position is down, like by a lot, well, not a lot, but basically if your position is down by a certain amount, then, it will go through like an hourly settlement period where basically it's like, hey, let's say this $100 position is down 10%, but you're collateralized against like 1,000 worth of let's say Osmos or like Atom token, then basically it kind of exposed like a small portion of it to the spot market. So basically someone now has a right to convert these Atom into whatever USDT to supplement that amount, that 10% drawdown for proper collateralization. So this again creates like a global margin system and allows you to kind of collateralize with like almost anything that's supported by governance.
Interesting. So Injective would benefit a lot by working with or in tandem with a lending protocol, right? So if somebody were to, let's say, use the underlying Atom that is being unbonded and then borrow a stablecoin with that as collateral, and then go on Injective, and then you collateralize the borrowed stablecoin and say, I'm going to bet on the movement of Atom, we're going to have some really interesting derivatives market emerging and speculation.
And here's a fun thing that we haven't really like exposed that to like the front end just yet, but completely possible is that derivatives are tokenizable. And so like basically your long BTC position or your short BTC position can be exported as a token to anywhere. So I mean, it's not something that we have fully touched on yet. It's just like a quirky little feature that we added. But it could be very, very interesting in the future.
But we do have that in CeFi, right? There's those markets on FTX. There's those markets on Binance. There's like BTC up, BTC down. You could even tokenize bets on. Yeah, sorry, go ahead.
That's a little bit different because they rebalance every once in a while. For this case, it's more like, hey, like I just collateralized this and I established like a long BTC 10x position. what I can do now is that like I can totally turn this into a token and use it as some collateral in like a lending platform that accepts this, and thereby borrowing out cash or using that cash to go out BTC again. But obviously, like they're not going to actually let you do that unless you're up a lot, because like you are 10x leverage to begin with. But yeah, like there could be a lot of like interesting composability and like atomic transactions that's going to happen.
Okay, so now that I'm understanding it better, this is more comparable to like BTC 2x flip FLI, right? And ETH 2x,
yeah.
right? You're betting on the potential for the underlying asset to double, and once it does, then you basically quadruple your returns, and then you're able to do that with the tokenized bet. The tokenized
yeah, kind of, right? So it's kind of like a lot of people like to like borrow against their stocks, or like like a lot of people also like to borrow against like futures contracts, or like just in general like their entire portfolio. That is kind of like the way like how CeFi would look like. It's like, hey, like I have this position that's like super in the green, so but I don't want to exit it just yet because I'm a long-term hodler or whatever. And so I can borrow money against that and just and maybe repay it later.
Got it. Well, this is very exciting stuff. And we did kind of allude to some of the interchain DeFi stuff that you could start doing with Injective. Are there anything else besides passing Oracle data via IBC in order for Injective to use? Are there other things that you anticipate users to be using IBC for on Injective?
Yeah, we're actually exploring a lot of stuff right now because basically beyond just asset transfer, there's also there's so much flexibility you can do. And one thing that we're like thinking about is, first of all, how do you create like a very instant ARB between, let's say, Osmosis and like an order on Injective? How do you, connect with Terra and maybe like bring over some of their lending protocol stuff, or introduce injective assets for lending. Or even like go through like a exchange process, or fetch some of the price feed, or share the price feed of spot markets on Injective with other protocols. So there's a lot of exploration, but I think one of the lower hanging fruit is definitely first of all bridging the Cosmos hub, so that some of the Ethereum assets bridged from Injective could be used on hub as well. And basically, have Atom to be tradable on Injective as well. And on another hand, connecting with Osmosis and a few other protocols as well on, just in general, like arbitrage, and also just kind of like taking Binance or like whatever centralized avenue out of question, and just, naturally arb between the AMM and also the Orderbook DEX.
Great. So I want to close this conversation with a real quick talk about your token, because we haven't talked about INJ at all. So we could talk about the token economics. And then lastly, the idea that, you're an Ethereum sidechain, rather than identifying as like a Cosmos zone. So let's talk about that. INJ token economics.
Yeah, so I think that's just kind of like the native token for like I guess the protocol, and so it has like a common property as any type of Cosmos zone. So people can stake INJ to get the value or reward, and the entire exchange process goes through like a buyback and burn. So any type of fee gets aggregated into like a fee pool, and 40% of it does get distributed to relayers as kind of like an incentivization mechanism, but 60% gets contributed towards a burn pool, so that people can bid using INJ tokens and just burn it. And the reason why we the protocol is designed to charge a fee. It's actually to prevent any type of like market manipulation tactics, and also as kind of like an extra incentive to like incentivize the relayers, because any type of volume the relayers bring in, it's 40% for them. And I mean, like I think people kind of consider us as an Ethereum sidechain. I guess it's because we have this Ethereum key kind of like key derivation for like signatures. So that means that we support like all the Ethereum wallets. so that basically the deposit from Ethereum to Injective is extremely seamless. And basically that was kind of like the way the protocol is designed, is to maximize the onboarding of Ethereum users, so that they can leverage the entire ecosystem, and act as kind of like a gateway towards IBC. But we aren't really a sidechain per se, because the consensus is independent. We don't really have checkpoints and stuff like that to submit to Ethereum per se. It's just that what's interesting is, obviously, because of PEGI and because of PEGO, the bridge is entirely decentralized and backed by the validators of the chain.
So yeah, you still do have a proof of stake bridge in between Injective and Ethereum, just without checkpointing into Ethereum.
Yep. So basically, so basically the way it works is just that, the responsibility of Injective's consensus is that the validator would also have to, run as kind of like the proper term would be kind of like a watcher for the PEGO bridge, and to, make sure all the transactions coming in.
Well, just somebody who's running a full node on that bridge, right?
Yeah. So basically, you will also run like an Injective node and also an Ethereum node.
Yeah. Any concern about block withholding?
Not too big of a concern, just because right now we've done a lot of testing. The slashing is working as, I guess, as expected.
Okay. Got it. So yeah, you're the fifth or sixth protocol that I've talked to who's building an independent bridge between Ethereum. So it sounds like there's going to be many bridges, and all of you guys are having direct ones to and from Ethereum, rather than just kind of like the core one which is PEGI, that isn't necessarily even launched yet. So that's exciting.
Yeah. I mean, for our case, it's more like it's just for bridging to Injective. That was kind of like the way we thought about in the beginning. And then later on, we realized that after enabling after upgrading to Stargate, actually we can bring it over to the greater Cosmos ecosystem, which actually makes it super interesting.
Is this PEGO bridge modularizable? As in, could somebody using the SDK use it and pull in a bridge themselves to their chain from between?
Yeah, theoretically possible. It would be theoretically possible, but I would recommend to stay within one standard. So most likely it would be Gravity Bridge, deciding the interoperability between all the IBC enabled chains.
And the reason for that is what? Credible neutrality?
Yeah, basically credible neutrality, and also ensuring that basically there's not so many iterations of channel tokens all across the entire Cosmos metaverse, I guess. But yeah, for our case, it's just back then it just makes the most sense just within the construct of Injective. But later on, I think what's going to end up happening is that we probably would want to connect with that Gravity Bridge and do some sort of swapping mechanism, so that it lands within the Cosmos ecosystem as kind of a Gravity Bridge token.
Got it. Okay, and we're going to take one question from the audience. Question is from Demir. He says, "When will the mainnet start? ... Canary."
Yeah, so right now we're kind of in this canary phase. So basically, we realize that test and prod is probably the best way to catch bugs, but obviously in a controlled way. So we've been running this chain for a while. Right now, I think there's over 100 million deposited into the chain through our PEGO bridge. So at least we know that the PEGO bridge is probably kind of secure. So what's going to end up happening is that once the Oracle solutions are fully tested and fully integrated, it will be canonical. So I think it will be either end this month or beginning next month.
Okay, great. Thank you so much. Why don't we close with, do you have any closing remarks and where people could find Injective, people could find you on social.
Yeah, sure. So basically, at Injective Labs is the official, I guess, Twitter for Injective Labs, and my Twitter is at Eric Injective. So I think those two are easiest places to find me or us. And yeah, like we actually have two pretty exciting product updates coming up very, very soon. So stay tuned and follow us on Twitter.
And how big is your team?
Right now it's like 30-ish.
Substantial. One more question. KO asks, what will become priority after Canonical, sir?
Yeah, basically, like first of all, there's still a lot of DevOps layer optimizations that we want to do to make sure that everything runs smoothly. I think that'll be like what would keep us the most busy in the first 2 weeks. And then afterwards, there's so much to explore. Basically, when now Ethermint is almost in test phase, and once it's ready, especially with all the work that Crypto.com helped out, I think it should also speed up our version or our integration of like Ethermint, and basically allow for a lot more dApps to be natively integrated with Injective. So I think that's going to be very exciting.
Oh, I didn't know that you guys were going to have Ethermint. So what is the expectation that you're going to pull in the Ethermint module once it's done and do a mainnet upgrade and enable your basically EVM compatible blockchain at that point?
Yeah, we basically, like before, for earlier versions, we kind of contribute a little bit, propose like an internal bridge between like I remember it was like either the bank module or something else with the Ethermint module, and basically now it's probably like once it's ready, we're just gonna pull it in as a module.
Got it. Cool. And we're talking to the people building Ethermint at the end of the year as well. So look forward to that. Great. Well, thank you for tuning in to Interchain FM. We're doing these interviews every single Tuesday with guest projects that are building in the Cosmos ecosystem, as well as building stuff in terms of general blockchain interoperability. Next week, we're going to have a slightly different structured conversation. We're having a discussion about Wormhole, and we're talking to Certus One, who is they were Genesis validators, and they are they're the core development team behind Wormhole, which is bridging the top 4 ecosystems in the crypto space, which is Ethereum, Solana, Avalanche, and the fourth one is Binance Smart Chain. Oh, and Terra, sorry about that. And we're going to have a market analyst's perspective on as well. We're having Ryan Watkins from Masari talk about the potential for this bridge to bring about a whole wealth of value from bridging all of these ecosystems. We're going to talk about how Cosmos chains are going to be able to potentially plug into this by enabling CosmWasm, because it enables smart contracts on Cosmos. So yeah, get ready for that. We're going to have on, Terra in the next one, as well as a couple other exciting ones every single Thursday. And then for the Thursdays that we're not available, we're going to be at Lisbon for Cosmoverse. So very excited about that. So yeah, very exciting stuff coming down the pipeline. Tune in next Thursday. I will see you soon. Thank you so much, Eric, for joining us today. Appreciate it. All of you coming into the live stream.
Much.
Bye. See you on the next one.